Hey, it's Tom here and welcome back to the channel. Now, I'm making this video because I have a bit of a confession to make. Now, if you've watched any of my videos in the past, you may have heard of me talk about this concept of the investment punch card. It's an idea that I first sort of got from Warren Buffett, who basically spoke about this concept of if you were given a punch card with 20 holes in it, and every time you made a new investment you had to punch out one of those holes, then you would think very long and hard about every individual investment that you make. And that is a framework that I've tried to apply to my own investing. If I can find maybe one or two investments a year, then I basically feel like I've ticked the box for that particular year, and I've done all I need to do to continue building a portfolio of really good investments. And I even have a joint YouTube channel with 4 other YouTubers called Punch Card Investing, and that's exactly where that name comes from. And the confession that I kind of have to make is that this year I feel like I've been kind of hyperactive. I took the opportunity today to look through my Sharesight account, which I use to kind of track all of my returns and portfolio activity and do my tax reporting and all that sort of stuff. And one of the reports that I can get out of Sharesight is basically all of the trades that I've done for a particular period of time. So I filtered that report on what I've done this calendar year, and I was kind of surprised to see that I haven't made my normal sort of 1 or 2 changes to the portfolio this year. I have in fact had 7 changes to the portfolio, and I must say that after seeing that particular report, and even after putting through kind of some of the orders that I've done to make different trades in the past couple of months, I'm feeling a little hyperactive, and I'm feeling a little bit like I may have broken one of the golden rules of investment from Buffett, which is to stick to that punch card analogy, and also to try and clone Warren Buffett's investment style. And Buffett famously said that lethargy bordering on sloth remains the cornerstone of our investment style. And I'm not the only one, I think, feeling this way at the moment. I know that Stig from the Investors Podcast Network has talked on his podcast a couple of times about how he's made 2 changes to the portfolio in 2021, and he feels a bit hyperactive just doing 2. So imagine what I feel like over here trying to be a Warren Buffett nerd and making 7 changes to the portfolio. But one of the interesting things that I found over the past couple of years is that activity in the portfolio tends to come and go in waves. Shout out to Dean Lewis. I found that there's been long periods of time where I've literally made no changes to the portfolio, and there have been short periods of time, like we've found in 2021 for me personally, where I've actually made quite a number of changes to my portfolio. So here's a brief breakdown of the actual trades that I have made in the calendar year 2021. So on 2 occasions I have added to existing holdings, and that was done in 2 trades, so 1 trade for each holding. On 1 occasion I have sold completely out of a stock, and I actually made a video on that one, which was Stellantis, formerly Fiat Chrysler, my first ever permanent loss of capital, and I've made a full video kind of breaking down kind of what happened there. On 1 occasion I have sold about 2/3 of another position. That was done in 2 trades, so I sort of sold 1/3, a little bit later sold another 1/3, and I still hold sort of 1/3 of the initial position that I had in that particular stock. And finally, on 1 occasion I have added a new position to the portfolio, and that was added to twice. So there were 2 trades, one making an initial position and then a second one adding fairly significantly to that new stock. And in terms of sort of the overall impact to the portfolio, these are a couple of the numbers that I kind of want to share so that you can get a feel for the overall impact. So in terms of the amount of the portfolio that's sort of been turned over in 2021, that is about 30%. It's actually slightly above 30%. But the interesting thing is that the sort of overall cost basis of the portfolio has only increased about 7%, and that's actually one of the core reasons why there is quite a bit of portfolio activity. There hasn't been a huge amount of new cash kind of added to the portfolio in 2021, so in order for me to buy things I needed to basically sell something else, which I will get into in a sec. But those are kind of the core stats that I've got from my portfolio activity so far in 2021. So now I just want to talk through why this has been the case. Why has there been quite a bit of activity in the portfolio? And I know that many of you watching might not think this is a lot of activity. Obviously, the day traders of the world and the mutual fund managers with 200 different positions will not think that 7 trades is a particularly large amount. But for someone who runs a pretty concentrated portfolio in just a handful of individual stocks and doesn't have sort of outside money flowing in and out, and that doesn't influence any of the decisions I have to make, I feel as though 7 trades is kind of quite a bit. So the first major reason why there has been quite a lot of activity in the portfolio is basically because I haven't been adding a lot of new cash to my investments. So as some of you may know, one of my goals for 2021 is actually to purchase our first home, and that is obviously going to require a bit of cash. So in order to do that, we've kind of just been stacking cash on the side, and there's been a little bit of money kind of flow into the portfolio of shares, but there hasn't been as much new money kind of flowing in as usual. And throughout 2021, I've found one new stock, which is Alibaba. Some of you may have seen me make some videos on Alibaba on the channel. And I really wanted to purchase into Alibaba, even if it was just a starter position that I maybe added to later. And in order to do that, I had to free up some cash from elsewhere. So I didn't have outside cash that I could just put into that, at least not at a significant scale. So I was forced to sell something else. And that sort of selling out of a couple of positions in order to add to a couple of others really explains almost all of the portfolio turnover this year. And it explains a lot of the number of trades. So probably about 3 or 4 of those 7 can be explained purely just by selling. And that selling was really just done on sort of an opportunity cost basis. In the case of Stellantis, I think I frankly just made a mistake and was able to sort of fully exit that with a little bit of a permanent loss, but not catastrophic damage by any means. And then at a certain point when I want to add to new positions, I just kind of have to look at what's the least attractive thing that is in my portfolio at the moment, and that's sort of the first cab off the rank to kind of be sold or at least trimmed in order to buy into the new position. So that's kind of where things have been at. If I look at my portfolio today, I really am quite comfortable with where things are sitting. So I think this craze of hyperactivity with my 7 trades for 2021 so far is likely to slow down quite dramatically. I really can't see too much on the horizon that would cause me to really change my portfolio at all at this point for the foreseeable future, really. Of course, things always come up, things change with companies in the portfolio, and new opportunities often arise. But I think I'm starting to be ready to enter sloth mode again, as Warren Buffett might put it. Channel my inner Guy Spear. When you look at Guy Spear's 13F, for example, you see no changes to the portfolio in the last quarter, and I think it was almost the same the quarter before that. So I will be channeling my inner sloth and my inner Guy Spear now in order to kind of just let the businesses in the portfolio do their thing and hopefully compound the value of that portfolio over time. And there's just one final thing that I want to share in this quick little update for you in terms of my hyperactivity. And this is an old Fidelity study. I've shared this on the channel a few times, particularly in some of my earlier videos. I actually first heard it referenced by Monish Pabrai, and in fact the sort of results of this study have been somewhat contested, but I still think it's a really interesting case study and an interesting concept nonetheless to kind of consider. So Fidelity, as many of you will know, is a very large brokerage in the United States, and Fidelity basically wanted to look at what some of the characteristics of their best performing clients are. So if they look at the investment accounts that have had the best returns over a long period of time, what are some of the things that these investors are actually doing? And the core finding really is that there is a very strong link between the lack of activity and positive returns. So the people with the absolute best returns in that study, and I will leave this link down in the description below, but the people with the absolute best returns either forgot they had an account with Fidelity or they were dead. They'd passed away, and obviously in both of those situations they're not going to be making a lot of trades, so they're really not buying into a bunch of optimism, selling into a bunch of pessimism, and kind of falling into the trap that a lot of people sort of mentally fall into. And they're also not sort of churning up the value of the portfolio by paying a lot of brokerage fees or by paying a lot of taxes, like a lot of US investors of course will have to do if they're selling things for a capital gain, for example. So there's a little confession video for you, and a bit of an update on kind of the activity that's been going on in my own personal portfolio, and also hopefully a nice story. And again, I'll leave it linked down in the description below to that Fidelity study. So I do really hope you enjoyed the video. If you did, please hit like and hit subscribe. I would love to hear what your own portfolio activity sounds like below. Am I crazy thinking that 7 trades is hyperactivity? Have you made 20 or 30 trades, or have you made 0 and really channeled your inner sloth and inner guy spear much better than I've been able to? I'd love to hear that down below in the comments. But that's it from me for this one, and I will see you in the next video. Cheers.